DFM property allocations run from underweight to highest ever levels. Hawksmoor Investment Managers is currently running property allocations at the highest ever levels since its portfolios launched over a decade ago. If we can own a Reit that deploys only modest leverage, in a subsector with a significant macroeconomic tailwind, and can generate 10% plus returns, with the income linked to inflation, we'd be mad not to have high weightings, says senior fund manager Ben Conway, pictured. He compares that to the paltry yields available in bonds, and the hugely expensive valuations prevalent in the equity markets to explain why the Hawksmoor Distribution fund currently has over 20% in property, having been diminimis at launch in 2012. The Vanbrugh fund has 13%, having been 0 10 years ago, while the Global Opportunities Fund, launched in September 2018, has 11% exposure. Is the headache over for open-ended property funds? That might not chime with headlines that have plagued the asset class since Brexit. In December, the M&G Property Portfolio suspended after redemptions overwhelmed its cash buffers, which at 4.8% were the lowest in the Investment Association UK direct property sector. Since July 2016, immediately after the Brexit referendum, the 8 largest constituents of the sector have faced redemptions of £8.2 billion, according to Morningstar data. Almost every fund manager's presentation I have seen recently, property or otherwise, kicks off with a few slides on liquidity, specifically, how quickly varying proportions of the underlying assets can be realized within a matter of days, says Whitechurch investment manager Tim Jones.But BMO Gam's announcement this month that it would be switching from offer pricing, having only just switched from bid to mid in January, has some suggesting the asset class's woes could be coming to an end. Hawksmoor's property overweight filled with REITs. Hawksmoor is picky with its property exposure and targets small subsectors, says Conway. The best value is not to be found in large office or retail, or indeed in the larger REITs which have fairly vanilla exposure concentrated in these sectors, he says. We prefer exposure to sectors such as industrial, logistics, care homes, social housing, Berlin residential, regional offices, long leases and specialist asset managers taking advantages of shorter leases. The investment manager holds urban logistics, Phoenix Spree Deutschland, Kiwatas social housing, Warehouse Reit, regional, Area UK, impact healthcare, supermarket income Reit. Industrial property and offices offer yield opportunities no other fund picker portfolio advisor spoke with shared Hawksmoor's bullishness on the sector. In the open-end space, Tilney is neutral on property holding a small strategic allocation to M&G UK Property, Janus Henderson UK Property and Aberdeen Standard UK Property. These funds are less. For more on this story, visit the news article link.